Hey everyone, should be a relatively quick video today. We're going to talk about structure and reading structure, okay? I've talked about it briefly in a couple of the other videos, the idea of if we're trending bullish, we're creating higher highs, higher low, higher high, higher low, higher high, and bearish is the opposite, lower low, lower high, lower low, lower high, lower low, okay? This is important because when we're creating a strategy, okay, like a trading plan, right, we want to be able to have some sort of directional bias so we have an idea about where, we're going to target. So if I decide for whatever reason I like this zone, I don't know, but when price comes around this area, I have to decide whether I want to buy or sell, okay? So that's going to be some of the idea about the directional bias. Alright, now especially if you're doing a trend trading strategy, you're going to need to know how price is trending. Okay? So, what we're looking for with structure. Now obviously it's not going to look perfect like this. So the idea is just that we're creating higher high, higher low, higher high, or a lower low, lower high, lower low. Okay? Now, if we look at price real quick, we could say, if we just look at this, pull this out of here, so we can see created higher high, higher low, higher high. Okay? Now, what structure is meant to do is we're finding the ranges within the trend. Okay? This market structure, okay, price structure, excuse me, is here to try to help us be able to trade ranges and find key areas within certain ranges. Okay? So, if we come over here, we'll see this be the start of our structure pushing down. Okay? So as we see, like our bearish example here, you'll hear those jets in the background, sorry. Very loud, right lit. So we'll do the same here, we'll draw this, pull it out of here, same deal, right? Lower low, lower high, lower low. So we're trading a trending strategy. Market structure is here to help us identify which way price is currently moving. Okay, so we can have an idea about where we're going to go. So if we can draw structure on and it seems our price is moving bullish, okay, towards the buy side, we're going to look for pullbacks and buys in the opposite way. Okay. Now, I'm on the 1 hour chart here. I'd say ideally what we want to do for marking out structure, you can do it however you like. I'd say it's pretty popular for people to draw on structure on a higher time frame, okay, and then drop down to a lower time frame, look for entries. That's not what you want to do. Great, do whatever you want. Now when it comes to structure, you can read price structure very aggressively or a little bit more conservatively. Okay, so this is actually a good example right here. So we see that overall this looks like a nice kind of trending move, okay, to the buy side, bullish here. Now we can say, all right, let's mark out our structure. So we got the bottom or low of the structure here, okay. Now again, we're going to identify a range price is moving in. If we're extremely aggressive, every time that price shifts, okay, we'd be like, whoa, right there. So this could be the low of the structure. This could be the high. If we're extremely aggressive, every time the candle is in the other direction, you could say this is now structure retraced, okay. Now sorry about that, stop my recording. So I went back in time though. This is the structure we were just looking at, okay. Now what I was saying, this is a 1 hour chart. Let's drop down to a 5-minute chart. This could be identified as the structure, right? This is what we just drew on the 1 hour chart, okay. Now we're saying we're identifying prices moving bullish, okay. Now at this point, in this exact example, we might not have enough information to say that it is exactly, okay, because all we've done, because I saw that we already looked at the example price continued up. So at this point, unless you read, I mean, even if you read price extremely aggressively, you probably still would have this labeled as bearish, okay, until this point here gets broken. Alright, just for the sake of this example, alright, if we're going to draw on a structure on a super tight structure here, okay, very aggressive. Now we're going to say, okay, we've identified the range, the low and the high. Now, if we drop down the time frame, you don't have to, but you can. Drop down a few, I guess. We come in here and say, okay, based on my rules, my strategy, my plan, I'm looking for price to get to certain levels and reject, and then continue for the buy. So let's just say this was a level you like to use, okay? Just right in here. All right. Now, if we look at this, we'll just cut through that one. Alright, this is a nice, I talked about this before, nice kind of retest level right there, right? Great. So it's kind of what we're looking at. And then let's just say, who cool you want to buy from here? Alright. Alright. Now, if we want to do price, if we want to do structure not so aggressively, let's go back to our higher time frame. We'll run through a few bars here. Okay, so when I use structure, I typically don't go super aggressive with it. So for me, it would be more so, here's the bottom of the range, and I would be more so looking for something like this to be the top. Now again, it really just depends on what you want to do. For me, I look for just a decent-ish pullback, okay? More than one candle, I guess. Alright, so again, it's kind of discretionary. It is based upon what you like more. Some people like to trade super aggressively. Some people like to be more conservative, so that, you know, in theory, if you're marking out this structure here, this could be the top, right, the high, and this could be the low. This whole thing could be considered your structure, okay? Or it could be from here or here. It really depends. So again, we mark these out, and we say, okay, I'm seeing price moving bullish. I marked out my structure, all right? Again, all we're taking the low, okay, or the high, all right? Just a change in the candle direction, okay? And then how aggressively you're applying it is up to you. And now, I'm trying to identify the high and the low of a certain range that we would like to potentially trade in. So now, this would be my bullish range I would be looking to trade in, okay? This is what I would do. And again, you can go to a lower time frame, you don't have to, whatever. It's not so important, right? And as price continues, right, now we get to decide, okay, how exactly do you want to draw on your structure? Right, so now, if we're going to stick to super aggressive, we put this back down here, okay, and say, okay, this is my super aggressive range because this is the established low, and this was the first move in the opposite direction. Now, once price breaks over this high we've established, right? Because remember, we're looking for higher highs, higher lows, higher highs. Price is now broken up here, so now our structure, or the range, right? Structure would move up to here. This would now be the new low. Now this, get this out of the way. This is now our new low, okay? Because it is the last candle, right? That was bearish, that created this high, okay? So we're looking for, the lows are going to be the lowest area that will create the high, okay? So bullish candle, bearish candle, bullish, that broke past the previous structure we labeled. Now created this high. This is the high that we created because price again has now shifted back to bearish. Okay? So again, if we look at this example here, we're expecting price, let's do it, to continue, just pretend that's together, in this sort of fashion. This is horrible. Let's just do this over. We're expecting price to move this way, creating higher highs to higher lows. These lows here, as we can see, is what create this higher high here. So the structure we would draw on would be from the low here. Oh geez. Trying to get a copy of this. There we go, to the high here. That would be the structure range. And then as we broke again, price breaks past this high, we do the same thing again, where now this would be our low, and up here would be the high, again, as long as price pulls back. Because on these pullbacks is when we look like, okay, now we have an established high, right? And after we break through the previous high, that's when we know we have a low that's established, okay? So this would have been the first low, the first high. This is the second low because price breaks through this, the high, the original high, and this is the low, the bearish candle, that has now created, right, quote unquote created, this new high is established because price has pulled back again. Now if you're looking at it bearish, price moving downward, it's the same, just in the opposite direction. Okay, now we're going to continue being very aggressive, okay? And now again, whether it's aggressive or conservative, that's really up to you. You could say, I need 3, if you say, I need 3 candles in the opposite direction of the direction we are moving to establish my high or low, okay, then this wouldn't be a valid high for you because this is just 1, 2 bearish candles. Instead of this being the valid high, it would be this one, because up here we see 1, 2, 3 candles. So now this range would be from, this would be the low, this would be the high. How you are going to define and establish how you will specifically view structure, again, it's up to you. I'm somewhere kind of in the middle. I don't look at it super aggressively, but not also very conservatively, kind of just moderately in the middle. I think that's worked for me. And you know, what works for you is what will work for you. So if we continue, we're going to again assume we're being extremely aggressive here, okay? So now we see price over here. Price has broken past. When I say broken, I mean closed, not just wicks. This wouldn't count for me, okay? Account closes above these zones, okay? So now, price, this would be the new established low, and this would be the established high, okay? Actually, if it were very aggressive, it'd be this one. Why? Because this was the last bearish move before we came and created the high. So this was a bearish move, but then we have this one as well. And if we're very aggressive, this could count as a low. If we're not as aggressive, I would have this counted as a low personally. But again, we're doing examples very aggressively. Alright, and then again, price breaks through. I'm going to say this is, that might be red, that is a red doji, but, so, again, define it, does dojis count? Dojis are these little candles that look like this, okay? They're kind of look like a T. There's not really volume in there, okay? The doji candle. Now there's different names for different ones. Some people are like, this is like a hammer or inverse. I don't know. Okay, but it's a candle where there was some indecision. Price didn't know where to go, so we kind of just stay put. Okay, so this high could be here, or it could be from up here. Again, how you want to define it, and then your low is going to be from here because again, this is the last bearish move before we created the new high, before the new high was established. Okay, so again, create higher highs, higher low, higher high, higher low, higher high. A higher high is established once price breaks the previous zone here, the previous high. The low is established, okay, the higher low is established when price creates this higher high. Alright? Makes sense, hopefully? And bearish is the same thing, the opposite direction. So we'll look at this one going down. We could say this would be the high of the range. And now this right here is going to be the low. Why? Because just like the other example, this is the bullish move where we establish the low down to the next bullish move. Okay, so price changed direction here with the candle, right? So we're moving bearish. Price moves bullish, so that gives us the indication that this is now the top of the zone, the bottom of the zone, excuse me, the range. This is the top, right? The high of the structure, the low of the structure. Now, if we continue this again, we see price clearly breaks. Okay, so we would come put this here. This would now be the high of the structure, and this down here would be the low. Okay, now we can use structure again to help us determine where price is going to be going. So if we're going to delete this. I know we just looked at it. I want this to seem familiar, and I want to get a couple good examples in. Alright, so now we're going to relabel this very aggressively, and we're going to use it to try to help us determine where price is headed. So again, we're going to say this is the low because we've created the high here. So now price is moving in this range. We're moving bearish. Now we're going to create the new range. That's going to be the low. Alright, and this, oh, I don't need both of these, hold on. Now this is going to be the low, right? So the high, excuse me. So we got the high. We're going to say we got the lower low. Okay. This is going to be the higher low. Now we've created the lower low, the higher low. Okay. Just like the other direction, lower low, higher low, lower low. Okay, that's what we're doing. So now in this range again, we're moving bearish, right? We've established price moving down this way. Now, if price is going to change directions, okay, start to see here, price changed, we get a reversal in price. We come here and we say, okay, until price breaks this line, this area, I'm going to continue to consider price to be bearish because this is a zone, right? The structure we use structure to determine the bias of price, the direction it's moving. We're going to say until this area here is broken, right? We take these examples away from each other. This is the low that we're looking at. When this area gets broken, then price potentially can start to turn around. Okay, so now again, we'll go down to the 5-minute chart real quick, because if we're looking at the structure here, which is what we're looking at, put these back a little bit, we're saying price is moving bearish in this structure, right? This area, the zone, the range, whatever. And now we're trying to say, okay, we're going to find areas within here that we expect price to reject and continue bearish. So simply, if we said, let's take the high of this range, right? High of the structure, when price hits here, we're going to expect a rejection back bearish. If we simply use that, as you see, if we just said something like that, whatever, you know, this isn't specific, just example. And now once price clearly breaks this level, now we say, okay, now I think price is changing. other direction. So we're going to go back up here. Okay, so if we say price has now clearly closed above here, because again this wick doesn't count, okay? Wick aboves don't count, at least for me. So close. If we close here, so okay, now we've closed bullish. We've broken this low to some higher low. Now I think price is moving bullish based on how we're reading structure. Now we get to define right structure this way. If we're going to super aggressively, this is going to be the low. This is going to be the high. Okay, so now we've been able to establish now price is moving bullish. So this structure bearish, right? Price is moving bearish. Price is moving bearish. Now we've seen it switch. Okay, closed above. We've seen switch. Now we're saying okay, price is moving bullish. Now we're going to trade a bullish bias until a lower high, excuse me, is broken. So we'll do the same thing, go to the 5-minute chart. We say, first example, if we waited for the top of the zone to get touched, again, you can create around these rules how you like, okay? In other videos, we'll go through some of the different options. Just for the example's sake, let's say for whatever reason you like this area right here, this area, and you said, okay, once we get over here, we're going to enter. Just ignore that for now. And you enter, and woohoo, boom, right? So, this is why structure is important, because it can help get you a directional bias. And as I've spoken about a lot of the other videos, when we're creating a structure, creating a plan, a strategy, directional bias, right? 3-step process, okay? Our area of interest, key levels or zones, whatever, and then third is just entry confirmation, if I can type. Okay, so I'm trying to work through these steps here so we can have the fundamental building blocks, y'all can, to be able to build these strategies. Okay, if you understand the building blocks, what's necessary at the ground level, okay, then you can use interchangeable. There's different ways to create this, okay? So directional bias can be from reading structure like we just went over now. Directional bias can be from using an indicator. You could use, my EMA is not going to, you could use an EMA, okay? Like there's different ways to go about this. If you have different ways, you have different understandings of each of these objectives, right? You can just it's like a la carte, just pick them, okay? Plug them in and pick them out. And then you can start creating something that looks good for you, that works well for you. Okay, that's all I'm trying to do through this channel, is really teach the foundational blocks, okay, the building blocks. If your foundation is strong, you can keep building upon the top. If your foundation is weak, no matter what other skills you learn that are more advanced or intermediate, it's going to be hard to find consistency because we're not focusing on the right parts of it. And I know that, trading seems so difficult and so tough. There's only like one way to do it, or this way or that way, or whatever. Like there's so many different ways to make money in the markets once you understand the foundations. That's why I going to harp on it a lot throughout the channel, because that's really, for me, that's what it is. And so many people teach the wrong things in the wrong orders. So you want me to teach you a strategy, and you're just going to come in and copy trade it, okay? But if you're not learning the blocks, right, the foundations, you're kind of just lost. It's like you skipped, the initial learning phases. So if you learn the parts, if you learn the skills of forex, the right ones, then you don't need any of them. Then everything else just falls into place. All right. Okay, kind of was rambling there. Hopefully this makes sense to y'all. If you have questions, anything, if you need more clarity about something specific, leave in the comments. Thanks.